In today's rapidly changing landscape, significant movements in cryptocurrency have captured global attention. From regulatory proposals to market shifts, the world of digital finance is evolving. We'll explore how these developments impact investors and the broader economy. Here are today's top 10 stories you need to know. Looking ahead, the future of the cryptocurrency market remains a topic of intense discussion as of May 15, 2026. Experts predict that the market will continue to evolve in response to technological advancements, regulatory changes, and shifting investor sentiment. While volatility is expected to persist, there is also potential for significant growth as innovation drives new use cases for cryptocurrencies. The interplay between regulation and market dynamics will be critical in shaping the future landscape. Investors are encouraged to stay informed and adaptable as they navigate this changing environment. Engaging with the latest trends and understanding regulatory implications will be essential for making informed investment decisions. As the market matures, the emergence of new opportunities will likely present both challenges and advantages for participants. The coming months will be crucial for determining the trajectory of the cryptocurrency market. As of May 15, 2026, advancements in blockchain technology continue to shape the cryptocurrency landscape. Innovations such as Layer 2 solutions, decentralized finance applications, and interoperability protocols are gaining traction. These developments aim to address scalability issues and enhance the user experience across various platforms. The push for technological improvements reflects the industry's commitment to overcoming existing challenges and expanding the utility of cryptocurrencies. Investors are increasingly looking at projects that emphasize technological innovation, as these are seen as key drivers for future growth. However, the path forward is not without obstacles, including regulatory hurdles and competition among different blockchain ecosystems. The success of these innovations will depend on community engagement and real-world applications that demonstrate their value. As the tech landscape evolves, the potential for transformative solutions in the crypto space remains high. Recent trends indicate a growing global interest in cryptocurrency adoption as of May 15, 2026. Countries around the world are exploring various approaches to integrate digital currencies into their economies. This movement is driven by a combination of technological advancements, financial inclusion efforts, and the desire for alternative financial systems. Emerging markets, in particular, are leading the charge as they seek to leverage cryptocurrencies to enhance access to financial services. However, the pace of adoption varies significantly across regions, with developed nations often exhibiting more cautious approaches. This divergence highlights the complexities of integrating cryptocurrencies within existing financial frameworks. As global interest grows, the importance of collaboration between governments, regulators, and the crypto industry becomes increasingly clear. The future of global cryptocurrency adoption will likely depend on how effectively stakeholders can navigate these challenges and promote a balanced regulatory environment. As discussions around cryptocurrency regulation gain momentum, a clear call for regulatory clarity has emerged in the crypto space as of May 15, 2026. Stakeholders, including investors and industry leaders, are voicing concerns about the ambiguity surrounding existing regulations. This lack of clarity can stifle innovation and deter investment, particularly among institutional players. The ongoing debates in Congress regarding potential legislation underscore the urgency for a coherent framework that addresses both consumer protection and market integrity. Without clear guidelines, the risk of regulatory backlash increases, which could negatively impact the growth of the cryptocurrency sector. Proponents of regulation argue that a structured approach could help establish trust and legitimacy in the market, ultimately fostering a more stable environment for investors. As the situation evolves, industry participants are advocating for greater engagement with policymakers to ensure their perspectives are considered in the legislative process. The outcome of these discussions could have long-lasting implications for the future of cryptocurrency regulation. The cryptocurrency market is currently experiencing significant volatility, particularly as of May 15, 2026. This upheaval is primarily driven by recent price fluctuations of major cryptocurrencies like Bitcoin and Ethereum, compounded by emerging regulatory discussions in key markets. Investors are grappling with unpredictable price swings, raising concerns about the sustainability of digital assets. The looming regulatory environment has intensified caution among traders, many of whom are reassessing their investment strategies to mitigate risks. Analysts highlight that the current landscape is reminiscent of past market corrections, prompting fears of potential downturns. As the market remains in flux, the demand for robust risk management strategies has never been more critical for participants. The impact of these developments extends beyond individual investors, affecting institutional players and the broader financial ecosystem. Looking ahead, the next few weeks will be pivotal in determining whether this volatility is merely a short-term phase or signals deeper, systemic changes in the cryptocurrency market. Investor sentiment in the cryptocurrency market is currently exhibiting mixed signals as of May 15, 2026. While altcoins like Bittensor and Ripple are gaining traction, major cryptocurrencies such as Bitcoin and Ethereum are experiencing price declines. This divergence has led to a complex emotional landscape among traders and investors. On one hand, there is optimism surrounding the potential for altcoins to emerge as formidable contenders in the market. On the other hand, the declines of Bitcoin and Ethereum have left many investors anxious about the stability of their investments. Market analysts suggest that this mixed sentiment could lead to increased volatility in the short term. Investors are advised to approach the market with caution, considering both the potential for gains and the inherent risks involved. As the landscape evolves, the need for clear communication and education about cryptocurrency remains paramount. How investors respond to these mixed signals may ultimately shape the market dynamics in the coming weeks. The cryptocurrency market has recently witnessed a downturn for major players, particularly Bitcoin and Ethereum. As of May 15, 2026, Bitcoin and Ethereum prices have slipped significantly this week, raising concerns among investors. Analysts attribute this decline to a combination of factors, including regulatory uncertainties and profit-taking behavior among investors. The downturn has sparked discussions regarding the sustainability of Bitcoin's price and its perceived role as a digital store of value. Many are questioning whether Bitcoin can maintain its status in light of increasing competition from altcoins and regulatory scrutiny. Ethereum, on the other hand, has faced challenges related to network congestion and scalability issues. This has led to increased scrutiny over its long-term viability as a platform for decentralized applications. Despite these challenges, some analysts believe this could be a temporary phase, with potential for recovery as market conditions stabilize. Investors are advised to stay informed and consider the broader market trends as they navigate this volatile environment. In market performance news, Bittensor, Teo, and Ripple XRP have shown impressive gains as of May 14, 2026. Bittensor led the CoinDesk 20 index with a rise of 1.7%, while Ripple followed closely with a gain of 1.6%. These movements come amidst a broader market context where major cryptocurrencies like Bitcoin and Ethereum have faced price declines this week. Analysts attribute this discrepancy to increasing investor interest in altcoins, which are often viewed as having higher growth potential compared to the more established cryptocurrencies. This shift highlights a growing trend where investors are diversifying their portfolios to include assets they believe may outperform traditional leaders. Recent developments, such as regulatory clarity for altcoins and innovative use cases in decentralized finance, have fueled this interest. As institutional investment in altcoins continues to rise, it raises questions about how Bitcoin and Ethereum will maintain their dominance in the long term. Observers are particularly focused on the next few weeks, which will be critical in determining whether altcoins can sustain their upward momentum and how they might reshape the cryptocurrency landscape moving forward. A significant development in the cryptocurrency regulatory landscape is the ongoing discussion around a Senate bill focused on digital currencies. As of May 15, 2026, this bill has attracted considerable attention due to emerging ethics concerns. Senators are debating the implications of cryptocurrency regulation, particularly how it could impact investor protection and market stability. Critics argue that without stringent oversight, the bill could lead to potential abuses and market manipulation, undermining public trust in the financial system. Meanwhile, supporters contend that regulation is essential for legitimizing the sector and attracting institutional investors, which could enhance market credibility. The discussion reflects broader tensions in Washington regarding how to balance innovation with consumer protection, a challenge that has become increasingly urgent as digital currencies gain popularity. With the bill's fate uncertain, industry leaders are urging lawmakers to consider the potential benefits of a well-regulated environment that could foster growth while ensuring security. The outcome of this debate could set a precedent for how other countries approach cryptocurrency regulation. As discussions evolve, the crypto community is left pondering how this legislation will shape the future of cryptocurrency regulation in the United States, with many advocating for a balanced approach that encourages innovation while safeguarding consumers. On May 15, 2026, notable venture capitalist Tim Draper announced a proposed bill aimed at easing Bitcoin adoption for U.S. businesses. This initiative comes amid increasing scrutiny from regulatory bodies concerned about the implications of cryptocurrencies. Draper's proposal seeks to establish a clear framework for Bitcoin transactions, which many believe could foster innovation and attract substantial investment in the cryptocurrency sector. The backdrop of this proposal is a growing demand for regulatory clarity as companies struggle to navigate the complexities of digital currencies and their legal ramifications. Many in the business community are expressing optimism about the potential benefits of such legislation, believing it could empower startups and significantly enhance the United States' position in the global cryptocurrency market. However, the bill faces potential hurdles, particularly skepticism from lawmakers who are cautious about cryptocurrency's volatility and the risks associated with them. If passed, this legislation could signal a transformative shift in how cryptocurrencies are integrated into mainstream business practices, paving the way for broader acceptance. Stakeholders from various sectors are closely monitoring the bill's progress, both as its outcome could influence future regulatory approaches toward digital currencies nationwide. As discussions unfold, the crypto community eagerly anticipates how this proposed legislation could reshape the landscape of digital finance in the U.S., potentially setting a precedent for other nations. Thank you for joining us today. Which story shocked you the most? Don't forget to like and subscribe for more updates on global news.